Good afternoon, and welcome to the Boring Millionaire podcast. My name is James Lamantia, and my mission is to not only make you money with the stock market, but to teach you how to make that money so you could confidently make it all on your own. So today is Tuesday, July 1st. The market is still open, but we are trading at all-time highs on the S&P 500. We saw 62.06 the last I checked before I started filming. And the past week and a half has been absolutely stellar and absolutely killer. So last Monday, we saw the market rally and we closed just under 1%. And then that followed through into Tuesday's trading where we did close over 1%. Wednesday, we kind of hung out and just relaxed. Then Thursday was a nice modest day upward. And then Friday, we did break the previous all-time high, which was 61.47 on the S&P 500 and 20,220 on the NASDAQ. Now, just a reminder, the S&P 500 and the NASDAQ are both indexes, which means they're benchmarks that basically show the performance and strength of the stock market as a whole. So the fact that they're at all-time highs and breaking record territory is a huge sign of strength for the market as a whole. So the past week and a half has been great. Yesterday was a positive trading day. We did see it push further into all-time highs. Today, we did take a little bit of a breather, but even within that breather, we did have positive movement, and that positive movement did break us further into all-time highs. So we are moving forward greatly. Everything surrounding the market is positive. Signals are positive. The VIX is down. The volatility index is down. And we are rounding in closer to the next earnings season. So last earnings season, companies reported great earnings. They reported great forward-looking earnings. So now that we're here in the next season, I'm hoping to see that these reports were accurate. The reports come out good. And so long as they do and volatility stays low, I think the market will continue higher. We're also seeing a lot of buyer strength and buyer volume in a lot of particular stocks. So what that tells me is that people are coming up, they're showing up and buying stocks when they are presenting a discount. I would also like to add we saw a lot of that in the past 2 weeks. Any opportunity that the stock market had to take a break and take a breather and even fall a little bit, buyers stepped up, they bought up the market, and now we're continuing higher because of that strength. So where do I think the market is going now that we broke all-time highs? I do think we're going to run 3 to 5% above our previous all-time high. That would take us between 63.25 and 64.50 on the S&P 500. And going 3 to 5% above an all-time high when we're in rally mode does make sense. It's fairly typical to see. So I do estimate that we're going to land in that area. And then from there, if we do start to see a decline, I think the lowest we'll go now is 6,100 or even 6,150. As I've always mentioned, the old highs present the new lows. And that's what we're going to see once this market does take a little bit of a breather. I don't think we're going to take a breather just yet. I do think we're going to move very slowly further into record territory. I would expect a lot of days where we're up 0.4, 0.2, 0.3, modest gains back to back. And then on a day where the market isn't doing well, I think we'll just move sideways. I don't think we're going to have some surprise 1% down kind of day where the market's in a little bit of turmoil. But I would like to say, if it does, buy that dip. We are in full rally mode, and any dip that is presented is an opportunity to me. So if the market's slowing down, find your particular stocks you're happy to be invested in and purchase them up and continue investing in those companies. So what am I looking for this week? So with the market rallying, you do need to find a little bit more of a interesting buy. You can buy whatever you want and hope that the parade moves forward. But what I like to do when the market is in record territory, I like to look for more of a discount, more of a unique opportunity being presented in a stock, and then take advantage of that. So where am I finding unique opportunities this week? So this week, I'm going to take $50 and break that $50 into 5 $10 increments. Now, with the first $10, I'm going to put it into Apple. Apple had just recently broke over its 3-month average, which I always mention is a good metric to be looking at. So it traveled sideways for a while, finally broke and held above its 3-month average. And the fact that it's still nearly 20% off its previous all-time high, while its peers are moving forward into record territory, it's going to need to play catch up. And when the time comes that Apple begins to play catch up, it's going to rally hard, and that's why I'm investing in it this week. The next $10 I'm going to take is going to be put into Alphabet. which is the parent company of Google, YouTube, and Boston Dynamics, as well as many other things. But they had to pay a $4 billion fine, which they are still appealing in court, but it seems inevitable that they're going to have to pay this $4 billion fine. Now, on the surface level, that sounds bad. It's going to hit their bottom line. It's a negative effect to the company. But being that it's nearly a $2 trillion company, $4 billion is really not much of a far cry for it. So when that news initially hit the stock, it did send it lower. The price fell nearly 5% the day that that news had come out, but it has only rallied since then. So again, just showing when there's bad publicity surrounding a stock, but it doesn't actually involve anything that changes the company itself or the industry itself, that presents a buying opportunity for me. And that seems apparent in the way that Google, or Alphabet rather, has been rallying since that news came out. My next $10 this week is going to go into McDonald's. McDonald's is also nearly 10% off its all-time high. It is also trading under its one-year average. So I would more so like to see it trading on the one-year average, but under its average isn't necessarily bad either. And I would also just like to add, it's the average price. So you're basically getting it at what it is really valued at. So always like to look at the one-year average, and McDonald's is trading under it, and they also pay a 2.43% dividend. So I always like investing in stocks that have a dividend because that is a quarterly income you're earning in the background just for ownership of those shares. So not only are you getting paid just to hold McDonald's, when the time comes that they begin to play catch up and the stock starts to rally, you will appreciate on the money you invested in while earning an income for holding the shares. So I absolutely love dividend paying stocks. And another dividend paying stock I am buying this week is United Healthcare. So the reason I'm buying United Healthcare is because over the past several months, it's just been surrounded with bad news. That bad news has sent its stock price from 600 at the high, basically to 250 at the lows, and we're now trading in a low 300 range. We saw 323 on the stock today. It has been in a calm range since this initial fall, and now I do think it's starting to get some of its footing, and it will begin to climb out of this discount and start to see prices that the stock has previously seen. I think it will be a little bit of a hard rally. I do think it has a lot of catching up to do, and once the market forgets about all of this bad news that was surrounding the company, and they remember it's still United Healthcare, it's still the leader in health insurance, and health insurance is something everybody's always going to need. That is what creates the great buy for me. You know, it's something that everybody still needs. And once the market starts to realize that and it starts to play catch up, we're going to get a great price appreciation out of this asset. I would also like to say it's a dividend paying stock. It is paying 2.86% for the shares. So you will be getting paid in the background just like you are for McDonald's. And the last $10 I'm going to take this week, and I'm going to put it into Boeing. Boeing is the leading manufacturer in commercial airplanes, and it's something that the world will always need and always have a need for. So they have also suffered a lot of bad publicity over the past couple of years, but the stock is finally starting to get its feet back on the ground. It was in a very narrow range for a very long time, and it's beginning to break out of that range. So the further I see it rally out of that range, the more I want to see it kind of cool down and hit its 3-month average. And that's exactly what we're looking at right now. It took a run, it's taking a breather, and now it's sitting at its 3-month average. And that is telling me it's a good metric to be buying it at. And I do believe that it will continue to run after it hits this 3-month average. So the reason I take $50 every week and break it into $5, $10 increments is because it shows that any budget could take advantage of the stock market. You don't need a lot of money. You don't need a crazy budget. You just need to take what's comfortable for you every single week and commit to investing in the stock market so that way you could continue to build a better portfolio for a better financial future. And with all that, thank you for tuning in. My name is James Lamantia. You could find me on Facebook, Instagram, Threads, and all episodes are available on YouTube, Spotify, and Apple Podcasts. If you have any questions, please reach out. I'd be happy to answer them. Thank you.